JB here. Hope everyone's doing that Sunday, Monday, July 11th, 3:30. On this fine afternoon, talk really quick about the markets. Some names I'm looking at go from there. S&P flirting, still up a third of a percent here. Let's see. I don't have my little fancy. Um, Nasdaq's up 0.6%. So decent session today, but off the highs. We hit 631.54 on the SPY at about 11:30. Chopped around into the afternoon, and then from I guess 1:30 or so to now dropped about $2 on the SPY. So nothing crazy. Of course, you look at the 1 minute candles. This from 2:30 on a little, could give a little concern here, but all things considered, it looks like another all-time high close for the SPY. The Nasdaq, up, will be another all-time high close as well. And it's funny, it's like as if Market Watch reads or listens to the rant or reads the watch list. But sure enough, what's their headline just earlier? The Nasdaq is partying like it's 1999. Why that may signal stock market sell-off ahead, and then they cite the same thing around the 20-day moving average that the Nasdaq 100 just rallied 60 straight finish above its 20-day moving average. Longest streak since 1999. And then, of course, that implies that there's a probability of, like a 90% probability that we're going to be red in the next 2 days. It's possible, right? I mean, the higher and more extended the market gets, the probability of a pullback increase. I mean, it's just simple stuff, right? Uh, I don't, I'm not going to sit here and get, load the board on puts or get a hedge just yet. Maybe tomorrow afternoon we'll see if things get a little iffy. But for now, I still think we're chopping, and then hopefully small caps can take the reign, or at least if this S&P and Nasdaq are flat or a little weak. Hopefully small caps can at least make up for that, right? So you take a look at a SPY, the upper Bollinger Band 636 or 635. It's tight, right? And you look at some of these candles, just impressive strength. All right, so again, not much in the way of catalysts this week. We just earnings, and the big one, Google's the big one. Obviously, Tesla. I don't know how much Tesla's going to be a big one regards to the overall market, right? I mean, I don't think people look to Tesla as the gauge for how is the economy, how are tariffs, how is all that stuff. The thing with Tesla is it has a large percentage of weighting on the S&P. So if it has weak numbers or it sells off, because it could have weak numbers and still rally, right? Then it would be an issue for the market. But to me, Tesla's like it's a negativity story, right? I think nobody's expecting much from Tesla, and to me, it's like everybody still talks about the deliveries and the cars. I'm like, it's moving on from that, right? And I'm not saying it's moving on from that per se, but they have so much more in regards to robo taxis, the Optimus, and the addressable market. Where I don't think it's so much about the cars anymore. You see Neuralink. I mean, that doesn't have anything to do with Tesla today, but just amazing stuff. All right, so that's kind of the overall market. So I'm not sitting here putting my bullhorns on saying we're getting to 640 here on the SPY. It might be choppy this week. I wouldn't rule out some pulls, but I'm certainly not going to be loading the board on calls either, right? I'm just going to be cautious. If I see opportunities to add puts or get SQQQ calls, I will and go from there. So that's kind of the overall market. Just really quick on open, right? So, open door soaring last week, gapped higher, rallying today, just got halted a little while ago, which just annoys the heck out of me when we see halts, especially when it's a retail name, right? When these meme names are going bonkers, I need to get a halt. The only people getting destroyed are the retail people. The only one making money are the market makers. Just how it works. It's the craziest, like, anyway, how that still functions like that just blows my mind. But I get the whole premise, you know. But it's like how are you protecting somebody? The stock is up so much. You think you're protecting the folks who got in at $4 today, right? By halting the stock on volatility, so that so they can't get out, right? Ah, and maybe they don't want to get out, and that's the thing. And then it just kind of like, all right. So just quick on open. So I think it was like I don't know if it was last year or late last year. I remember someone asking me about open, and right, if you don't know, uh, long time, and maybe it's 2013. I was big into Zillow, right? Zillow might have been like a $30 stock. Citron Research, he was bearish. Zillow, you can go back and look. He thought it was like a $5 stock, $10 stock. The stock went from like $30 all the way up to like 300, right? And this is back when Trulia was around. Trulia was the other online real estate site. Zillow acquired Trulia. Zillow, once that merged, they had a dual class structure like Google. So then there was a split. And so now you have Z and ZG, right? So those are the tickers. So I was very big into Zillow. A lot of people were bearish name. I made lots of money on Zillow back in the day because I'm always about disruptors, right? Now, back in 2013, I'm like, this real estate sector, the transaction, the whole landscape needs to be disrupted by somebody. And until someone does that, I feel, but real estate, I'm not saying a real estate agent's job is not hard, right? I mean, you can get someone you're buying a house, you're their agent to buy a house for, right? And you go on 200 appointments, you get 20 offers, and all offers are declined, and you had to like rewrite all the offers 20 times to raise them and lower them, and so I'm not saying there's no work involved, it's or doesn't deserve to be compensated, but I think it's in regards to the percentage of what the transaction looks like, it shouldn't be a percent of the transaction. But anyway, that's my thoughts, my opinions. But there's other parts to it: the title search, the insurance, the surveys, like all of that goes into it. It's just a ripe sector for disruption, and it's no one can really get it right, right? And that's why I love Zillow, and I made lots of, and then it kind of flustered around because nowadays it's commonplace. Back in 2013, it wasn't like you went on Zillow, you went on and you knew what the home values of the houses were around you, and it wasn't that accurate. The bear case on Zillow used to be, oh, they're inflating prices on houses, their data's not correct, crazy stuff, right? So these are rants for other days. But great story, right? And then they acquired Trillia, and then Redfin. So Redfin, I'm a big bull on Redfin. Was one of my top 5 stocks back in the day because the same kind of premise. But Redfin was trying to work out the middleman stuff with the title insurance and doing everything from soup to nuts, and then work down on the real estate agent cost structure, right? And offer the pricing, right, of the house value, home value, and stuff. So love Redfin. And then so then you have Open Door, right? And, I don't know if it was a SPAC or however they came public, but I remember looking at that one and I'm like, that's a good premise, right? I mean, it's a good business model. But the thing is, it's you want someone, if they can execute, maybe they're able to disrupt the real estate model as a whole. But to me, it's like the so if you don't know what the Open Door pretty much does is they buy your house for cash and then they fix it up and sell it, something to that effect, right? And there's other things they can get you with an agent and things like that. So I mean I mean it's layman's terms. That's what they do, right? So uh, if they were just a company that just went about bought distressed properties, fixed them up and sold them, okay, maybe, right? So it's like a fine line. Like maybe I'm missing a boat, right? So the guy who's set off this whole meme run on the name was long Carvana, and that's his analogy, right? And Clifford Sozen, there's other folks that I know they're long Carvana, and so he brings up a lot of comparisons with Carvana early stage, but Carvana, was like disrupting the car selling experience, like in a major way. No one was doing what they're doing. His case is that Open Door is doing what no one's doing. I'm like, no, wait a second. Zillow was doing the same thing back in like 2020, somewhere in there, buying homes, Insta homes, get the cash deal, fix them up, sell them, but then they stopped doing it. Why? Because there's too much uncertainty, right? You worry about you buy the house, right? What happens if real estate market goes in a tanker? Uh, you can't fix it up. You can't find labor to fix it up. They had an issue with that, right? And then not only that, you're putting all these assets on your books. So it's just, it's like a slippery slope. So it's hard enough to have one real estate transaction, right? The buying and the selling. To have more, to know that you own, whatever it is amount of homes, and you're buying more and selling them. I mean, it's just so when I looked at Open, I'm like, and they have debt, uh, and tough cash position. So I hope it goes to the moon for everybody. That's some of the reasons. I mean, I was watching it at the end of last week. I'm like, it's just I look at it, and if you listen to the guy who's the me, he says like $82 based on their forward revenues, but their revenues are based on buying or selling homes, right? But you got to buy the homes. It's not like the difference between what they bought it. They have like 1,000 homes in their inventory, right? So I just it's tough for me to wrap my head around it, even at this level here, because it's debt, it's cash position, what it has to do. The good thing for Open Door right now is if it keeps going higher, they could just raise more cash, right? And that'll give them a lifeboat and hey, generate revenues and probably give the stock even a boost and become one of those. I wouldn't call it a mini Ponzi scheme, but hey, that'd be good stuff. But I think it was back in June they were talking about doing a reverse split. So which would be good. I mean, that'd be another way to set the shorts on fire. Do a split, and this thing would go to 500 bucks, whatever, like Groupon. But anyway, so that's Open Door. I hope it goes to the moon. Disappointed to see that halt earlier, and I wouldn't say disappointed. Like I understand how the market operates, but when you see a name like this is, I mean, it's most of it's retail buying. retail gets killed on halts. No, the halts are there to protect the trading public, right? To protect the investor, but it does the reverse. It kills them, right? It doesn't give them any chance to get out. I mean, if the market's supposed to be liquid enough, you would think it'd be able to absorb sells. So anyway, that's all right. That's open. All right. So now just quick on individual names. Joby, waiting for the next shooter, not shooter drop, but at some point to pull. It hit all-time highs earlier today. I didn't want to be in a spot with the October strikes. Uh, I didn't take advantage of locking them in. Not only that, the premiums, despite it being up like 4 or 5%, the premiums weren't going up in lockstep with the calls. So, it's like squeezing water out of a turnip, whatever you want to call it. I don't know what the analogy goes. So I'm like, this is probably the most premium I'm going to get on the calls, pending it going over $20. So I locked some more of the Octobers. Now I just hold a couple of those, and then at some point I'm going to add some more strikes. I don't know if it's going to be at $14.95. I don't know if it's going to be at $17.50. But monster gainer. Happy with the profits and happy to be able to lock some in. And then you know what? I'm not going to. If it goes to $20 tomorrow, I'm not going to. That was part of the plan. So all right, so that's Joby. Serve disappointing. Actually, just broke under $11 here, under its 200-day moving average, 1078. So frustrating to see it down here and talking about that area again. But hey, if anything, it does creates opportunity. I did lock some of those August 15s in. Of course, in hindsight, maybe I should have locked them all in for 100%. But I think it heads higher, and some of it I think is just a function of some of these names that have been on fire last week. It's kind of like pulling all the names down. I'm not going to do anything here today, and especially if the market maybe is a little tricky over the next 2 days, I'll probably just be patient, and then at some point I'll reload. And then Edit, right? So Edit was one of my top 5 stocks. I don't know what year it was, but it's one of those small cap bio names in the gene editing space. There was already that acquisition I was talking about a couple of weeks ago with Eli Lilly bought Verve for like 1 point something billion. So that kind of put a spark in some of these gene editing names. And then you look at a name like Edit. Edit's like a $260 million market cap with 230 million cash, 20% short interest. They just had good data at the start of the year. And it's one of those names I think could just melt higher. So in lieu of trying to get some short day strikes, I went and got some Januaries for next year. And the thing, trading options on these names, right? So, and the SPY's hitting lows here, 629. We'll see if it breaks here. So the thing with the options, like me, I'm all about the return, right? The risk reward. So if you go and you buy common stock on Edit at $3, right, and you spend $1,000, so you have $3,000 in potential, in common stock, and then let's say it goes up to $10, you made $7,000. Not too bad, I guess. Depends on your risk profile, how much you put, how much you invest. But let's say you do the options, and instead of spending the $1,000 on, on common stock, you go out and get the January 5 calls for 35 cents, right? Let's just say you spend $3,500 on those, and now it goes up to $10. You have 100 strikes, you're talking substantial, 70 grand in profits at least, right? So your position will be 70 grand as opposed to 10 grand. So that when people ask, especially on these under $5 names, why would you get the options? Because I'm looking for the maximum reward for the risk I'm putting on, right? So when you look at a name like Edit, there's a risk, right? Because I mean, it was a dollar stock back in April, so there's a risk that it can go back down to there, right? So the thing is, your risk is defined with options. I mean, your risk is defined with common stock too. It can go to zero, but if you have a $3,000 investment, it goes down to the stock goes from $3 to $1, you lose $2,000, right? But if you have so you got to control risk. So you got to anyway. That's rants on Edit, rants on that. VKTX reports earnings Wednesday after the close. It was actually over 33 for most of the day, and then pulled back. So again, I'm just going to hold my August strikes. Disappointing to see the premiums there actually just went flat. Now take a look at GameStop today. It's like GameStop said, "Oh, meme stocks are running. Hold my beer," and just started to take off at about 2 o'clock. It's still, when a name boggles my mind. A lot of times back in the day, I used to like still trade it. I'm trying to think like gold, right? Back in the day, if gold was going up, I'm like, oh, looks like a great opportunity to get some puts, and I would keep getting the puts on it, even though it's going against what I thought should be, downside, right? Same with GameStop. I think it should be substantially higher than where it's trading right now. But for me to just keep adding calls on the name for that move that's not happened just doesn't make sense. So I don't know if I'm going to wait for a major breakout, 28, $29. Maybe I'll revisit at some point. But for now, it's just it's a name I look at, and of course I'm interested. I think it should be trading substantially higher. but I thought it should be trading substantially higher when it was $30, right? So nothing's changed besides the stock price. And when you have options, unfortunately, time is the issue, right? So I don't have infinite amount of time for the calls to pay off. So if it's just going to sit here, I might as well just wait. So definitely a name I'll be visiting. And then, I keep talking about the list of the earnings names, MDB, which was actually almost at 225 today, still looking at that, but that they report at the end of the month or in the next month. Dexcom just sitting here pretty much flat. So I'm not going to do much there. Deck reports this week too. And I was looking at Deck, but again, it's one of those names could be interesting. It's like sometimes the market is already like pricing in disappointment or at least flat earnings. So maybe it's not going anywhere. So and that's it, folks. Let's have a great afternoon. I'll be back and Spies right here at the Lowe's. Rock and roll.